Well, hello traders, and welcome back to another video here on the Learn to Trade channel. Today we are going to talk about volume, right? And the difference between the volume profile and the actual volume on your charts. So what we're going to do, we're going to look at this E-mini S&P 500 futures chart. Right, and as you can see, this is the volume profile, right? The normal volume that you get on your charts, if you are trading on an MT4, it's this one right here. It's the indicator. Hold on, volume. It's the indicator below your charts, right? This one right here. It gives you, all right. This indicator gives you the volume traded in this 10-minute candle, right? Now, this is a good indicator, but the thing about this is that it gives you the volume traded in one single candle, right? So this big candle right here is the volume traded in this candle right here. And the difference between that and the volume profile, which is this entire indicator here, is that the volume profile gives you the volume traded at a level, right, at a price level. And the main difference is that, well, I really don't care how much volume was traded in this chart if I'm not, well, if I'm in a trade, it might be some good indication, right? For example, if I'm short the S&P 500 here from the daily highs, and I see a big spike in red volume, I'm gonna be happy because, well, I'm gonna be happy because I'm on a short trade, right? And our spike in red volume, it's a spike in sellers at this precise moment in time. But that really doesn't matter when it comes to forecasting. Why? Because when it comes to forecasting, I don't care how much volume was traded at this candle right here. What I want to know is how much volume was traded at this level price right here, right? So that's the main difference. Why? Because the more volume is traded at a single price level, the harder that level is going to act as support or resistance. Now let's watch today's point of control. And that level, that red line, which is the high of the histogram right here, is called point of control. The point of control is the level that has traded the most volume in this session and that traded the most volume in the last session and in the session before, etc. Okay, and if you notice, the point of control is acting as support, right? So I'm not saying that we are going to go higher on the S&P 500, but after yesterday's move from the highs of the day to today's point of control, we're talking about a minus 2.33% move. So that's a big bearish move when yesterday's range was from high to low a minus 3.15% move, right? So sellers were in control of the immediate market, but found buyers at the point of control at the level of high volume, right? And the reason is that most of the times here is where big orders are going to be placed. So you might want to look for indications of some relief in the bearish pressure in this case to find for good bullish entries. And just by looking at this candle right here, this big rejection candle, yes, we printed a new daily low at this moment in time, like 20 minutes ago. But then look at what happened. A lot of buyers jump in on the market, right? You can see it on the volume right here. This is why it's good also to use when you are looking at volume, to use both indicators. But using only the volume indicator really doesn't tell me much, right? It needs to be in conjunction with the volume profile. Okay, so that's basically how the volume profile works, what it is, and how you can use it on your trading.